Hey everyone, welcome back to my YouTube channel. I'm Angela O'Hare, your favorite Las Vegas realtor.
And I'm Rob Howe, Rockstar Realtor, HAU, Houses, and You.
Yes, so we are celebrating our 5-year anniversary. We started doing market updates August of 2020, right after COVID.
Yeah.
And we got, I bought these shirts for a Christmas gift that year for favorite Las Vegas realtor. And Rob was always the rock star realtor, right?
Yeah.
So
I'm still that on YouTube.
Yeah. So I thought we would wear our shirts that we've been doing this. And Damien put it to us. So if we 5 years, that's 60 market updates. But that doesn't even include, the first year we actually had the Rob and Ann show, which we were doing almost every Sunday,
every
right?
week.
Every week we were doing a video. So we've done a lot of videos together.
Yeah.
I think one time we only missed, and it was December because you were out of country.
Yeah.
But we've done.
We've been able to always get them in. Yeah.
Yeah. So
a little late sometimes, but better late than never, as they say, right?
Yeah. Yeah. So congratulations to us for doing this for 5 years. And I don't think there's any other agents out there that can say the same thing.
Yeah. It's a model of consistency. That's for sure.
Yeah. So we wanted to go over the July 2025 numbers. What is going on with the Las Vegas real estate market? Are we ever going to see an end in sight with this median price? It's still a crazy market.
Yeah, it is. Well, it has crazy findings, crazy numbers that you wouldn't expect. And so I think it needs to light shed out on it. Why are we seeing these things? Yeah.
And throughout this video, you are going to hear me compare the same time, July 2022. As I have been mentioning in previous market updates, I felt this time around was very similar to 2022 timeframe when the Fed started increasing interest rates.
Absolutely.
It's a little different scenario this time around. However, actually, it's still, I think, seller FOMO on both sides, because in 2022, sellers had feared that since the interest rates were going up, let's try to get our home on the market, capitalize it so people can still afford, right?
Yep.
And this time around, because we have hit our all-time peak, in my opinion, this is me personally, and I'm sure Rob could agree, that sellers have the FOMO now, but this time around is that they feel with all the economy and things going on, while we're at this peak, that they're going to capitalize on the highest median price ever.
Yeah, absolutely. Sellers would like to get their properties sold, but within reason. So this is where we have some challenges in the market and interesting things we can talk about. Yes, the sellers want to test and see what they can get, but are they going to be willing? Some of them aren't going to be willing to drop their price.
But if they bought their house even 5 years ago, how much equity they have gained. So they're still in the winning side.
If they want to lock in a win, you can. If you're a seller, you can lock in a win. It's just maybe you're not getting it at the top. But funny enough, the news we have for you might make you think that you can.
Right.
But you have to know what your product is. You have to know what that property is. And if it's going to, if it's going to get you what you need right now, or if you maybe have too much competition out there.
Yeah. And, typically homes are on the market longer than 30 days. So if you are thinking about listing, don't expect it to sell within the weekend like it used to, unless it's in a subprime location. You have updates galore, and it's priced accordingly.
Yeah, absolutely. Even if you know that you're better than the neighbors that you have,
right,
and you still need to be smart about your pricing. I think that's what's happening.
You can't overprice, right? So like our house is probably overpriced for the neighborhood. We've put too many upgrades in it. And there's a lot of sellers that may have outpriced themselves in their community. by doing their upgrades. Does that make sense?
It does. It always does. Yeah. And I mean, in a time where you're having surging market, those properties are going to be the top. They're going to always get the top dollar.
Right.
And maybe they still will in certain areas now, but you have to know that, I think the buyers they're just not buying it.
Yeah.
That's the bottom line. They're not buying it.
And another thing that we want to go over is, which I feel is very important right now, is new construction and all the deal incentives that the builders are offering.
Mm-hmm.
It is unbelievable right now. And, usually around September, October, I start pushing heavily the new construction sales, but a lot of these builders are having summer events, end of summer sales, that are unbelievable interest rate savings. It's pretty crazy.
Yeah.
Okay.
Yeah, this is not a surprise to me. As the market changes, so will they, and they want to incentivize.
Right. They have a lot of, so resale has competition with new construction, and now new construction has competition with resale because of all the inventory.
It's switched quite a bit, and I would say it's back to what most of my career has been, which was that on the resale market is usually where you can find your deals. Although what happens now is that the new home sellers have to make you a deal,
yes,
to compete with those resales.
Yep, exactly. So let's dive into the numbers, and as always, we appreciate any comments that you would like. We will answer them as we go along. We're going to go over, let me get my eyes on, number of closings. We had 2,021 closings for the month of July, which is up 3.9% from the prior month, but down 5.8% from the prior year. So we had less closings this time last year, but we had more closings than we did for the month of June.
Yeah, I think that's a little bit of a surprise. It's not like a lot. It's 3-something%, but it's usually. Well, maybe it's because you're still getting the end of that springtime just barely. Would you think it's that?
Well, if we look at,
why would we have slightly more?
Well, if you look at last month or last year, 2024 closings, it was only 2,145. We're at 2021. So it's only 120 some difference.
Yeah.
But it's still up or down 5%.
Mm-hmm.
Does that make sense?
From last year.
From last year.
And it's up last month. And I just think it's a little bit of a surprise because we're coming out of that usually busier time for selling. And now we're seeing a slight uptick by 3%.
Yeah, typically this time of year in real estate, at least in Las Vegas, tends to be our slowest season. July, people are still taking vacations. I remember the first 2 weeks of July, it was dead. Like people were probably on vacation 4th of July and all that good stuff. Mm-hmm. And now August, people are getting ready for back to school.
Yeah.
So once September hits, that's when I start really picking back up, gearing up for the fourth quarter.
Yeah.
In my opinion, because right now it's hot. Who wants to home shop out in this heat? But man,
I think maybe the school thing could be part of it. A lot of people trying to get closings done before they have their kids going back to school.
True.
So
but we had a great July this year.
Mm-hmm.
It was the best July I've seen in a long time.
Yeah.
With don't you remember how cool it was? It never.
Oh, as far as the weather is concerned,
yeah, it didn't have it didn't hit 100 degrees that often. It was a lot in the high 90s.
We had some mornings that felt cool.
Oh my God, it was, and nights too.
And nights, yeah.
But now August feels brutal.
Yeah, we're back to some heat. You know, surprise! It doesn't like stop. It just like moves around each year.
Yeah,
it might be a little hotter in May or June or July, whatever.
Well, we're starting to see now I think because next week it's going to be in the 90s again. So
Yay.
We're starting to go back down.
Back to the 90s.
And 90s is great, right?
Yeah, the 90s were great.
Yeah.
And I remember those years. Oh, we're talking about the temperature. Sorry.
Right. So that brings us to the median price. And the shocking news is the median price remained the same at $485,000. We both had bets that they would decrease.
Mm-hmm.
However, it didn't go on that trend or that roller coaster that we thought it was going to go on.
Not at all.
But we are only up 1% from last year. So this time last year, we were at 480,000.
Mm-hmm.
And remember last year.
That would have been the peak, was it?
Yeah.
For last year?
For last year, yes.
Yeah.
But last year, remember, I was thinking that we would hit the peak and hit almost 500,000.
Yeah, that we
or
would
that
keep
we
climbing.
were, we would
Yeah.
keep climbing, and then
Mhm.
we just kind of
You
stabilized.
almost got there. I mean,
But
it
so
moved
we've
up.
only increased 5,000 year over year, which is not huge,
Mhm.
in my opinion.
I think, yeah, no, it's certainly not a big number considering where we've been in the last 5 years. But what I will say is it's huge to see that we're holding this median price.
Yes.
We have to uncover why that's happened. We have to let people know why that's happening, because as a seller, you're going, man, I'm getting
I should still get good money.
Median price is still, up. It's at the peak.
Right.
I should be able to sell my house for. But what can we tell people about that?
Well, before we get into that, I
Mhm.
also want to mention that, again, I'm going to refer back to 2022. And in July of 2022, they dropped to 465,000. So again, the peak of the market was May of 2022 at 482,000. By June of 2022, they started increasing interest rates. And by July of 2022, they had already lost
15K.
less than 15.
Yeah, sorry,
13K.
12,500.
Yeah. So they had lost 13,000, 12,000 in that 2-month span. But us, we are holding steady.
That's why it's
So
wild.
this is what we say is bizarre, and why we have an idea as to why.
It's, yeah.
But before we get over that,
Mhm.
I wanted to bring in one very important information, is the average
Yes.
price. And
I think let's dig into that.
dig into that. Yes, our median price is 485,000. However, the average price of homes sold for July was 600 and where are we? 8,000. 608,000.
So of course the average is just the average of all the sales, and you come up with a number,
right?
And then the median is just the middle price of all the sales. So you could have a whole bunch of lower prices and then some higher prices, and then you're going to find the middle of that. It's not the average would end up being higher, and that's why we don't use average. But it's something I was thinking about, and it's funny that you had already calculated the average, because I was like, how are we hitting this median? How are we staying strong?
Right.
Especially since the beginning of the year was 3 months of median price high,
485,
and then we dropped for 1 month.
480 for 2 months.
For 2 months, sorry,
Yeah.
2 months.
Mhm.
So you're thinking trend is going down,
Yeah.
especially with the way the market is going. And now 2 more months at 485. Okay, so why is that happening? It's not happening because there's this big push of volume of sales, that's for sure. But it's because, and this is that average that you brought up, in my opinion, it's because you are seeing that more higher priced homes are selling. And so the people that are in the lower prices ranges are not as active. They're not able to buy right now. And so it is holding that median where it's at.
Yeah, and the
It's
medium
deceiving.
is like you have higher numbers in the medium than you did before. So then those numbers are it's just takes the numbers from the top and the low in that medium aspect.
Yeah.
So then those numbers are never really changing.
Yeah, and exactly. And so you normally, I think in a more robust market as far as buyers are concerned, a lot more volume, you'd have more sales in the lower ranges, and then you'd have your sales are up on the higher price ranges, but the median will still be, it doesn't get pushed down to the lower just because there's lower sales or lower price sales. This is the reverse.
Yes.
So there's less sales at the lower end and more sales a little bit higher. But it doesn't do anything to the median. It doesn't really pull it away. So it's not pulling it down yet. It's also, there's other things involved in there, but that's what I was thinking.
Yeah. And again, it's interesting how the trend of comparable, we're very, very, very comparable to 2022. Yeah. And by the end of 2022, the median price dropped to 425,000. At this rate, I don't see it dropping like it did in 2022.
It's, unless we have a sudden, whoa, a makeup for all the, these last months where we thought it was going to drop and suddenly it does drop significantly, which I don't see happening. I just think that, because you have sellers, it's not as if sellers are just dropping their prices like crazy. Some of them do and have to, but many of them just say, I'm not going to do it. And I'll either take my property off the market and do it later, or I'll just let it sit,
right,
and see what happens.
I was interviewed for Bloomberg News.
Oh, cool.
And I was featured in an article in Bloomberg News. And they were interviewing me for the Las Vegas housing market.
Mhm.
And I told them about my one listing I had in Summerlin, how we listed it at 950,000, which, I'm not a type of agent that overprices my listings. I'll list it where I feel is priced accordingly. But because the market had changed drastically, we had price cuts and the listing expired. We relisted it at like $799, and we got multiple offers and sold it for $810. So it decreased by what, 140,000.
Yeah.
But homes sold 6 months in that community for $950. So I know I didn't have it priced, but it's amazing where you can still, as a buyer, get some really phenomenal deals.
That is your job as a buyer right now, is to find that seller that has to sell, is going to get you to get the price to where it has to sell, or to where it sells.
Right.
And ignore these other sellers that are just not going to do it. If you unless you fall in love with a home and you're just willing to pay whatever they're asking,
right,
which is fine. But for the most part, you can find deals out there, and those sellers that are listening to you and I are trying to make a deal if they want to get it done.
Yeah. I mean, unfortunately, the market changes daily, weekly. I mean, from one minute it's this, and the next minute it's this. And then now that we have these new comps, that's what the house is worth, even though it was worth 3 months ago at 750 or 950. Does that make sense?
Oh yeah. The comps are going to start changing. Although again, you still have when I go to show a seller comps right now, I can still show them. And this is the explanation that I have to say is like, look, these happened, within what usually would be our comparable 6-month time frame,
right.
But the market has changed, and so you have to be careful about what you're seeing happened versus what will happen now. Look at what your competition is. You got 2 or 3 neighbors that are selling the same floor plan.
You have to look what's currently on the market as well.
Yeah, if they're selling the same floor plan, and even if they're not as nice as yours, you have to be careful thinking, you know what, a buyer will come in and pay me more, maybe a little bit. But I've seen it over and over again where the nicer property isn't necessarily the one that sells. It's the lower price property.
Right.
And this is a little bit of the opposite of what was happening, because you had a really nice property. That's what people had their eyes on, and we're going to go.
Well, the funny thing is in 2022, it wasn't like we had mentioned in our previous market update, where the sellers knew about giving some incentives, closing costs, or the prices weren't going down as I thought as drastically, but then the median price went down so drastically. So it's kind of interesting.
Well, at that time, I don't think we talked about this before. I don't think they were getting the message of doing these deals where you could do a lot of back end,
right,
and closing costs for, even the agents weren't as up to date on it. We were kind of telling people and training people that, hey, this is what you can do.
Right.
But I think that it just was price dependent then. Now people are seeing that you can, if they are getting into the market, they realize maybe I can ask for some closing costs, pay down this higher interest rate.
Mm-hmm.
And then I won't worry about the price as much if I'm getting a lot on the back end, if I'm getting a good amount.
True. And then too, if it praises accordingly or not, you can do some renegotiations as well.
Absolutely.
Yeah,
absolutely.
So let's get into the condos. They had a decrease in median price. They went from $305,000 for the month of June to $290,000 for the month of July, which is almost 5% decrease.
Okay.
And then a 2% decrease year over year.
This one is where we are seeing some reality hit the this is what I would want to point to sellers that, hey, what does this mean? You have a $15,000 decrease in a part of the market. The part of the market that happens to be the first to go down and the last to go up. The condos in particular, they're always the first to go down and the last to go up. The townhomes are mixed in there. So, and sometimes the townhomes, I think townhomes have been holding condos up nicely.
Yes.
Because those will still be a nice popular item to sell. But the condos going down as much as they have in a time that we expected everything to kind of take that route, maybe not a $15,000 decrease.
Yeah. But they did that one year remember? And then they shot back up. I think it was last year.
Yeah, they may, but I think this is a piece of evidence to show that we have, that would be more of the realistic, market here, and especially in that lower price range area, where people are not able to afford as much as they were before. So when they are going to buy, they're going to look for a deal, and you need to give it to them if you're one of these condo sellers, and if you're not, well, you're probably sitting on the market.
Right, makes sense. We'll talk about luxury. 152 homes sold in July that were over $1 million, compared to June's 150. So there was 2 more homes. No
it's
big
just
deal.
Steady Eddie over there.
And they've been steady.
Yeah.
Because remember, at one point in time, we had under 100, right?
Mm-hmm, we did. Yeah.
We was always like in the 90s.
Always below 100 when we started. Yes.
But the median price did decrease slightly. It went from 1,400,000. Why isn't this working?
145.
Yeah, I went from 1,445,000 to 1,418,500.
Yeah.
So it only had a little over $26,000 decrease in median price.
And as we know, the luxury stays very, like, it can be pretty all over the place with the
but it's not. It doesn't go much. It's just slight little bumps.
Yeah,
road bumps. Unlike sometimes you'll see the roller coaster where they'll 1 month they'll be up, 1 month they'll be down, and vice versa.
Yeah. Well, what I'm seeing when I've been pulling numbers on luxury, you still are in a similar type of market where you need to make sure if you want to sell, that you're one of the only 181 people that are in contract right now out of over 1,200 properties that are on the market. So you've got a little over 1,400 or around 1,400 properties total, and 1,200 of them are on the market, and 181 of them are under contract. So you want to be one of the ones under contract, right? So you still need to be competitive even in that market, even though it's very steady.
Yeah. And, talk about new construction in Summerlin West and how most of those homes are starting the mid-millions right now. 1.5 base price. Doesn't even include the exterior elevation, the lot premium, structural options, upgrades. By the end of the day, when all that's said and done, you're over $2 million.
And I think that the luxury buyers, or the buyers in this market here, are sensing that and looking at resales more than they have been for a while, because they're seeing that they have a little bit more opportunity there. And if you don't want to go and pay the premiums in new construction,
but they're selling still.
Oh yeah, people love new.
Yeah, I mean, they're selling.
And also because a lot of these resales are not, they need love. Yeah. They're sometimes they're not the greatest floor plans, and they're missing something. And then somebody goes to a new home and they realize the new home builders have been very smart in what they're offering, and they're offering everything that somebody needs.
Yes. We went show houses today, and up an Ann Road up in the Northwest, there's a Lennar community called the Estates.
Okay.
And there are 3 floor plans, all with RV garages, all with next gen suites. And there's this one floor plan that I fell in love, and it's made me thinking, I may want to buy new. It's the Gannon floor plan that has the RV garage plus the 2-car garage that's attached to the next gen suite. The next gen's like an apartment that has 2 bedrooms and also the dining and kitchen area. It's a 6-bedroom house, over 4,000 square feet. And I'm like, oh my God, I want this house.
Yeah.
It's making me think I want a new construction home.
4,000 square feet. That'd be a little bit of an upgrade, huh?
Well, it's only 1,000 square feet more.
Yeah, I thought it was even less than that.
Yeah. Yeah. But it's all single story.
It's all single. I'm just going to say.
And the lots are a quarter of an acre or larger. They're big lots.
Well, what are they doing on any incentives on those things, or are they selling them too fast over there?
No. I would probably build from ground up. That way you could build from ground up so you can select your own options.
Okay.
Because then I'd get what I want instead of having to deal with it later. And they also are now teaming up with Blue Haven Pools, where you could build your pool while your home's being built and finance it.
Finance it all together.
Yeah. Because most builders don't, I don't know any builder right now that offers that type of incentive.
They don't usually like to do that because it's another way that the deal can get tripped up, right? So they want to be very sure of it.
But it's kind of cool to get it done at the same time the house is being built. Then you don't have to worry about, because pools take 2-3 months to be built.
A lot of people don't want to do that. Yeah. So they're doing another smart thing at Lennar, and I hate to tout them because
well, this house starts at 1.2. And even though I'm very comfortable where I'm at, my house is almost paid off. I'm like, oh, but it's this would be our forever home, single story, 6-car garage. I mean, come on now.
Forever home until you want to size down.
Oh, I never want to size down. I want all my kids to live with me. No, I'm just kidding. Anyway, let's get back on track. If you've guys seen that Gannon floor plan by Lennar, it's a winner, in my opinion.
Got one comment there. We want to.
Debt, divorce, and death. People sometimes have to sell. Exactly.
Absolutely. That's your job as a buyer. And it is obviously our job to help you find those, not necessarily the death and divorce, but like the seller that has to sell.
Yeah. I briefly saw an article in the RJ, I think it was today or the other day, about how many homes got foreclosure notices or on the brink of starting that process, and how the homeowners in Vegas supposedly can't afford the houses. But I don't know how that's possible, especially if they bought in the era where they got 2.5% to 3% interest rate. But oftentimes now we have the highest unemployment rate here that we've had in a long time in Las Vegas, especially with all the casinos now, with the less tourism that we've been having. Have you heard about all this?
I have, but I've been on the Strip and I'm kind of wondering, okay, I'm not seeing it.
Well, my thought is that, during COVID, the casinos were offering everything and anything to anybody, right? And I think those casinos, those people, the hotels are greedy by charging you all these extraneous fees.
Yes.
Just to friggin' have a hotel room for one friggin' night or 2 nights or 3 nights to have one of those service
100%.
fees.
Awful.
Vegas was always known. Parking. Remember back in the day, you get $3.99 steak dinner.
Yeah.
Everything was cheap, and that's what Vegas was known for. But now they got greedy, in my opinion, and
you're not the only one.
Overcharged, and now people, who wants to spend $1,000 for a few nights in Vegas?
Yeah, I definitely think that's the bigger factor here.
Yeah.
And I think, you might not like to hear this, but there are parts of our economy that can go into recession. Doesn't mean the whole thing is in recession, but people are definitely saying, you know what, that's not worth it to me to spend that money and go to Vegas. I will say there's still many people going to Vegas. I think that some of this seems overblown, seems like, the negative news sells.
Yes.
And it's what's going to get everybody to, type on their phones and whatnot and have comments about it. But boy, I've been in the Strip a couple of times recently, and like midweek, and still it's like bustling. It's like,
it's still hopping, but that could be just the outside and not what's happening in the hotels.
I'm sure. I was in the hotel. I was in MGM a couple of times, but of course, this is just could be my experience and what I'm seeing. And I do know that there's possibility that there's less tips being made by people on the Strip,
Right.
But going back to whether or not people are going under because of this, I think that it's, first of all, the foreclosure process these days takes a long time.
It takes a long time.
Yeah. So if there were things that are happening now that are compounding what has already had people get into this position, then that could be true. But I do think a lot of these, just because you have notices happening, what it is, you can easily say that we're at this new high level because they were restricting prior to at COVID times.
Right.
You couldn't even go into foreclosure. They couldn't foreclose on people.
No, they would do the back end, whatever. They push everything to the back.
They'd
I forgot what they call
refi
that.
it basically or whatever. But it's
brain freeze. I can't remember.
It's they basically redo the numbers and allow you to attach it to the loan.
Right.
But so I think that what you're seeing is yes, we aren't even to traditional levels prior to like COVID of foreclosures.
Right.
So yes, it's up, and you can say, hey, this percentage is higher, and make it sound awful, but I don't think that we're talking about awful.
Yeah, because during COVID, the lenders had that forbearance.
Yes.
They did the forbearance, and people
Mhm.
thought once that forbearance was over, we would have a crash in 2021 because now people still had to get caught up and we didn't have it.
The lenders were smart. These servicers were smart and gave them workouts that made much sense. And now the big thing that I would absolutely say here that is probably the number one thing. If you're worried about people going under foreclosure, well, you're going to see a lot more inventory come on because they're going to sell. They got equity.
Yeah, and plus too, just because it's under foreclosure doesn't mean that it's going to be lower than what the value is. They're going to try to sell it.
They're going to try to sell it, where they can. It's because they have equity.
Yeah.
So the big deal, going back, like people always talk about 2008. So real quick, let's say big deal back then was that all the equity was wiped out.
Yeah.
Right. So people didn't have equity, and so they had to foreclose and go short sale. Now you're talking about if people are in trouble, boy, that's a piggy bank for them.
Yeah.
Okay. So even if they had to come in and undercut their neighbors by a bunch and sell for less, they're still making money and walking away and not going to foreclosure. And the last thing they're going to do is go to foreclosure because it means they don't make that money.
Yeah, exactly. So now we're going to go over the number of new listings on the market, which was 3,242 new listings, which is down 3% from June, but up 9.5% from the prior year.
So this is another piece to the puzzle that is interesting because I think we were talking that we thought inventory would keep climbing. To see it actually didn't climb that much. I was watching it last month. I was saying, okay, it looks like we've peaked.
Right.
And we really have hit a pressure point.
A plateau.
Yeah. I don't know if it's plateaued so much yet because there is still some room to,
Right.
if people sort of back up. Now with rates potentially change, we haven't even talked about that. But
yes,
next month, it does look like rates could be changing.
Yeah.
And I don't think that'll have an immediate impact, but it will start to have an impact. And it will then put the ceiling on how much inventory is going to keep climbing.
Yeah. So I wanted to compare it to July of 2022 when we had 4,459 new listings.
Okay.
Again, you can compare it really well between these 2 years. And we had similar amount of listings during that time frame. So we actually had less than we did
coming
July.
on at least. Overall on the market, there was still a lot less than 22.
But exactly. And then, so I think that's a good indicator of where we may be heading. I think we may be now on the downward trend, whereas in 2022, it kept on going for a little while. And like you said, we may get a little more, but I don't think it's going to be as drastic, in my opinion.
We have, yes. And we've ticked up a little bit, but we're still under 10,800. We were like in the 10,700 total on market. This is important to note because the last time we had a high in our inventory was 2017, and it was like 11,000.
But did you look in 2022 September October timeframe?
Yeah, it was much lower.
Higher?
No, the inventory was much lower.
Oh, okay.
Yeah,
because I know we got up to about 8,000 in single family homes during that time frame.
Yeah, I think it stayed under maybe 10,000 or just peaked at over 10,000.
Okay.
I'd have to check. But I do know that we are at a new high from 2017.
Okay.
It's still, though, we're not talking about it for as many people are in this town to have 10,700, 10,800 properties in the market is not crazy. It's only because we don't have the buyer volume to eat up that inventory.
Yeah, and somewhere in the RJ too, they were saying that there was we're 36,000 homes short.
Yeah, we got lots of short, and apartments are burning down, but as we speak every day. So if people want to, sorry, I'm bouncing all over the place, but this is definitely key to this point too.
Right.
Oh gosh, did I just float away again? I hate when I do that. I'm sorry. Ange.
That's okay. I don't remember. I don't know what you're leading to.
Oh, it was really. Thank you. Thank goodness. Buying me time. The rental market.
Oh, yes.
Okay. So the rental market is definitely softening. It's not like it's not going up.
It wasn't crazy. Yeah.
Yeah. the reason why this is important to note is because a lot of these sellers that got 3% rates, you know, don't have to sell, are going to try to, they can lean back on renting. Now, maybe they're not going to get, you know, the highest rent prices, but this will add to more rental inventory, and this will start to actually drop the rentals, continue softening rental prices. Right. This is good for the average person who isn't buying yet, and hopefully that starts to, you know, help people be able to save some more money. But also these people that are not selling, they're not going to be desperate. They can turn around and rent the property if they want.
Yeah, you know, and two, you know, when you think of rentals and investors, we, you know, Monument by Pulte Homes has those townhomes right there off of Lake Mead. Okay. And they had them at a really good price, 1,800 square feet townhome at like, you can get it for $525. And then I was thinking, okay, if I got it at today's interest rate or even whatever incentives they're offering, my monthly mortgage would still be high that I couldn't even get the rent for it. So if I wanted to make it into an investment property, the numbers wouldn't make sense, in my opinion. Yes. So that's why you probably don't see a lot of investors that are financing, because the rent is not going to make sense or smart, because their mortgage payment is going to be higher than what they can get the rent for.
Absolutely. Absolutely. You really, if you're in a position where you have that long gone 3% or, you know, lower rate, now you're talking. Yeah. You know, you bought it at a good price. You got the nice mortgage that can actually make more, you know, on the rent than what your mortgage is. All right. But yeah, buying right now and trying to rent it out, you're probably going to rent out at a loss.
Yeah, exactly. So then that leads us to availability. There are 7,147 single-family homes listed on the market without offers, which is up 2.2% from the prior month and up 54.2% from the prior year.
All right, so 2.2%, not bad considering where we were talking. Right. And it goes to what I've been saying, which is that I've been watching that number. Yeah, it moved up a little bit, but over a month's time, not bad, 2.2% considering.
Yes, but 52% from last year.
From last year, that's a different story.
Last year, this time, we had 4,634 single-family homes listed without offers. So that's huge. That's a little over, 200 and something. Now, or no, wait. 3,000 something. Yeah. But again, to circle back, July of 2022, we had 7,331 single family homes listed without offers. So again, we're very comparable to the amount of listings without offers. They had slightly more than what we have now.
Yeah, it's pretty wild.
It's very wild to be very, I've been calling this.
That year.
Yeah. And then now we'll go to months of supply. And we are currently at 3.5 months of supply. Last month we were at, I don't have that, which is down 1.6% from the prior month, but up 63.7% from the prior year, which again, last year, this time we're at 2.2 months of inventory.
Yeah. And what was it in 22?
And 22, 3.5 is the same.
Same exact. That is pretty wild.
Yeah.
I will say that the fact that we didn't go up at all in single family months of supply, it somehow went down. By a small margin. It must have been,
we had more sales.
It must have been 3.6 last month.
Yeah, I think so.
But yeah, that is a good sign for anybody that was really concerned about seeing an overload of inventory.
Right. Well, that's why I think we're either stabilizing or we're now on that downward trend.
Yeah, maybe we're getting to more just traditional movements, traditional amounts of inventory.
Well, too, now we're going to be heading into the fall and winter season. You don't see as many houses on the market as you do during that time of year. But, as a person looking to buy new construction,
yeah,
I've seen better deals now than I've seen towards the end of the year with builders.
Yeah,
because they are doing less sales this year than they were last year.
Okay.
So they need to make their numbers, and they're starting early with these incentives.
Well, we're going to get into those new builds. I know what is the big key if I was looking at a new build.
So lastly, 56% of the closings was on the market 30 days or less, and 61.4% was on the market 30 days or less for the prior month, and 69.9% of the homes was on the market 30 days or less for the prior year.
So it's a number that's not great, because it shows evidence of sellers that you are going to have to wait longer.
Well, homes are on the market much longer. Yeah. And
it was a pretty drastic move there. So yeah, not surprising, because there's a lot of overpriced stuff that's just going to, either it's going to sit or they're going to pull it.
Yep, exactly. There's only one comment. Matt said, love the shirts. Thank you.
Thanks, Matt.
We wear them once a year, every August. If you guys are just joining, it is our 5-year market update anniversary. Rob and I started doing market updates August 2020.
Did we do the first one at my house?
Yes, in front of the fireplace.
Yeah, on those horrible chairs.
We didn't know what to do. We were like, yeah. It was fun. And we've been doing this for 5 years.
Yeah, it's wild.
It's wild to think that it just seems like it was just yesterday that we met.
Yeah, and all the things that have happened in between.
Yeah.
When I really think about it, I go, yeah, that feels like 5 years. But when you just tell me that, I'm like, that's the fastest 5 years of my life.
I probably haven't been to your house in like 3. We used to always take turns going to whose house, and I haven't been since you redid your front yard.
Oh yeah, you haven't seen the whole thing. No. Yeah. Well,
we'll have to come over.
Yeah, you got to we'll do one there or something there sometime.
Yeah. We used to, and then if you guys are just jumping in, we used to have our own Rob and Ann show. It was a very fun show.
Yeah.
We had a lot of characters. Our thought was kind of doing it like a Saturday Night Live skit kind of thing, where we would go over like the 3 worst photos on the MLS, make fun of agents and taking cell phone photos.
Yeah.
What else did we used to do?
Well, I just remember the characters stuff.
We had Rocco.
We had Rocco. Rocco was the old guy that was like a real staunch,
from New York. That was
hey, what was this?
So we would like do skits and
we had the what was the guy that I played with what would we call
with his glasses?
He could predict the future.
Yeah, and he talked funny.
Yeah.
If we still have it on YouTube, the Rob and Ann Show. If you're ever curious to watch all those old episodes,
it's so silly.
We had the best of, which is the best one to watch, which goes over all the bloopers and all the funny things that we did.
Yeah.
Yeah. Anyway, so now we're going to finally talk about new construction. Let's see what this person said. We took ours off the market after a year. We will wait till next spring to see what the market looks like. You know what? Actually, I know I had said this and Rob was like, well, you should never say this. If you're a seller and you don't need to sell and you're not going through those major debt, divorce, or death, if you don't have to sell, in my opinion, don't sell right now.
Yeah, springtime usually springs up nicely. I think you're just going to have to watch and see where things are.
I think February and March are the best times to list.
Absolutely. If we get better rates, it's going to bring more buyers. We're going to see a balancing out of the market. Assuming that we don't have anything crazy that gets thrown in there that we can't predict, I think it will be a good time to sell by next spring. Yeah. So just keep an eye on things. Make sure you got the right people behind you and helping you.
Yeah.
Where are you selling, by the way? Is this in Las Vegas? Because I'm wondering, we got a lot of people from out of state. I'm wondering if many people are having trouble, like in the California market and other markets, and they're trying to move here.
Yes.
But they can't sell their house, and now they're like, all right, pause.
I heard Florida was really bad.
I know parts of Florida.
Let's see. My house has only had one person look at it, and it's $40,000 under comps now. I'm paying off my $57,000 solar. See if that makes it move, and no action 20 days on market. Yeah.
Okay, 20 days on market isn't terrible. I do think that if you were originally showing that you weren't going to pay off that solar, I was working with somebody that was doing the same thing. That it's a bad idea right now. You got to be able to pay off that solar as part of the sale, especially if you have other properties that are competing with you and maybe doing the same, or if they're not paying off the solar and you are, well, yours is going to be going.
Yeah. And I've done a video not too long ago about solar and all the PPA and the leasing and the renting. When it comes to resale, people are looking for paid off solar. They don't want to take over your loan or the PPA or the lease.
Yeah. It's another, problem in the mix, or potential problem in the mix.
Yeah.
So you really it's the easiest thing you can do. Sounds like you have a very nice home. If you dropped it by $40,000 and you have a $57,000 solar on it, it's probably a larger home. I think, it's just a matter of your desire to get this done. And if you want to book a deal now, get it done for yourself, and don't worry about it if you can just make what you can now.
Yeah. And right now too, if you've had it listed for 20 days, you're hitting right now the summer, going back to school. Maybe it wasn't a good time to really list right at this time. So it may take a little time now. If in the next couple of weeks, because I have a listing that's only had one showing also, I let my seller know that if we don't have any more showings in the next couple of weeks, then we may need to consider lowering the price again.
Yeah.
Because if you don't have showings, that means that it's priced too high, unfortunately, even though you're below comps. And that seller may be the downfall.
Yeah,
with it not being paid off.
I absolutely 100% agree. They've put some more in there. Do you want?
Yeah, you can read it.
It says it was. Oh, okay. This was not the original. This is going back to the comment on what they're.
Oh, I don't see.
After a year, they pulled their. But it was Northwest. Angela
yeah.
showed it once.
Yes.
Liked my garage organization, but buyers didn't like animals behind her house. Always tough when you have things you can't control.
I remember it.
Yeah. Okay. Yeah.
So the one 2 doors down did sell. Sorry to hear that. I would say to list it probably in February, March timeframe. The earlier in the spring selling season, the better, in my opinion, because people start really looking that early.
100% agree.
Yeah.
Yep. And then if you got a little time, a little run up, you'll probably, you're in February, you'll probably be selling it by March, maybe latest April, depending on the market.
Yeah. And then Matt says he doesn't see rates dropping till Jerome Powell is out in May, unless Trump can kick him out sooner.
So I think that the people that I trust that I watch are talking, it's in like 95% that we're going to see a rate change in September. I think with the new economic news that was out today, which has to do with inflation not being as high as they thought it was going to be, I do think that we will see a rate drop next month. That's not just me saying it. It's people I trust. So
yeah, I mean, it's been 3 years, folks. 3 years.
It's time.
They haven't really tamed the inflation down tremendously. Food is still freaking expensive, right?
Right. No, I mean, but inflation takes everything into account, of course, and that's where I've been noticing like rents and stuff that, housing is starting to, and that's a big part of the inflationary, combination.
Right. Yeah. I mean, if we didn't ever have COVID, then we wouldn't be in this situation. And COVID, I think, was the number one factor.
Wildly different outcome.
Yeah.
And it's almost hard to think about like what it would have been like.
Right.
I think we would have been here, but just maybe years later.
Yes.
Because I think it would have just been a gradual step by step.
Yeah.
Like,
Yeah, homes increased tremendously in value over, especially 2020, 21 was like the high. And then parts of 2022 until the interest rates started going up.
Yeah. And that's where I just, if I could be a therapist to somebody right now about selling their property, really decide where you've won and where you really need to be able to get this done. What do you need? What's important to you? And how badly do you need to sell and move on to book something now so you don't have to worry about the future?
Right.
If you're that seller, you need to make a deal right now. And that's, it's obvious the price. Your agent can only do so much more. We are marketing experts, but we can only do so much when it comes down to what we're dealing with right now, because the market it's just a very different.
Yeah, I spend money on Facebook ads and YouTube videos and everything, and there's only so much you can market the house.
Yeah, and I mean, at some point you're marketing to the same people over and over again, because there's only so many of the buyers that are going to be interested in your property. So getting it right from the very beginning, so it's a good reason to start over sometimes.
Oh my gosh, sorry.
And I know this is a nap time
Getting
soon.
to be nap time. My body's like, okay, Angela, that's your body's shutting down. It's time to go take a nappy. Who here takes naps in the middle of the day? Raise your hand. Not just
I
kidding.
can't do it.
All right. You can't do naps?
I mean, very, very rarely. I have to be pretty worn down.
I have to.
Yeah.
But then I get a second wind and then I'm still going after, right? So,
well, you're up real early too, right?
Yeah, I get up 5:36.
Yeah, that's
What time do you get up?
It's 7:30.
I wish I could sleep in that late.
Yeah. I mean, like I'll wake up at 6 on Friday and then I'll be up about the same time on Saturday. But most days I don't have to get up till about 7.
Wow.
7:30.
My cats won't let me sleep in. Kai is on my chest, on my face, and he's licking me saying, get up, feed me. All right, let's talk about these builder incentives. I'm really excited to talk about them. Century Communities is having their, excuse me, let me actually just take a.
Yeah, get it. Time to get it.
Century Communities is having their Purple Tag sales event. Get unbelievable savings on select homes when you finance through the affiliated lender Inspire Home Loans. Get a 30-year fixed loan with a 2-to-1 buy down plus $3,000 in closing costs. So if you do an FHA or VA loans, you get 3.875% fixed interest rate for the first year and 4.875% interest rate for years 2 through 30. And last month that was even lower, I think. So it's crazy. And this is a big trend that I've been seeing a lot of the builders offering, which is the 7-to-6 ARM, meaning that you get 3.875% for the first 7 years. And then after year 8, it adjusts what the market is, or by then, hopefully you've refinanced.
Yeah. And that's based on the confidence that the rates will go down in the future because you will be able to refi before that 7-year mark.
Exactly. And by then you may have sold your house too.
That as well.
Yeah.
A lot of times people, 5 years and they're off to a new house.
Yep. And last, they have a 30-year fixed conventional interest rate at 4.875%, which is still well below the average. I think the average now is 6.5,
It's
6.7.
It's in the mid sixes.
Yep.
Yeah.
Okay. Now, Lennar is having their summer clearance event. They had something last month or last week. They have a new one, and they have 3 different offers going on. You can get a 4.5% fixed 30-year interest rate on an FHA or conventional. But on the conventional, you need 10% down on select homes, which are move-in ready in the Las Vegas area, and get 3% towards closing costs. And you have to finance through Lennar Mortgage. Okay.
Yeah, they're giving some.
So
good
then
stuff
they
there.
have 2 other programs. They have a promotional conventional loan 3-to-1 buy down or 2-to-1 buy down on select move-in homes in the Las Vegas area. Also get 3% towards closing costs. But the first year you get 2.99% interest rate. Second year, 3.99, and years 4 through 30, 4.99.
Yeah.
Can't beat that. Then with the, I didn't write this. I think that one should be FHA. This is wrong. This should be FHA. The FHA loan program, 2-to-1 buy down. Let me just make sure from my Lennar rep.
Well, this one was the FHA.
No, that was
conventional?
FHA or conventional.
Or-
That's
yeah,
the
okay.
fixed. Marianne. Yes. Okay. So for the FHA, the 2-to-1 buy down, you get 2.75% for the first year, 3.75% for the second year, and 4.75% from years 4 through 30, and must close by the end of September.
Okay.
Okay. So I think, 2.75 and 2.99, even at 4.99, you're still below the average.
Yeah, big time.
Okay.
Yeah, and you can get similar things if you really work a deal on the resale market, but those rates that they're offering are tough to beat.
Plus, if it's a move-in ready home, we can negotiate price too.
Yeah.
But you need your agent with you on the very first visit. And if you scan a Lennar QR code, they do ask if you're working with an agent. And if you are, you must hit yes. Otherwise, we will not be able to represent you.
Yeah.
End of story. Now, Richmond American's having their Labor Day savings event, which is a little different than a lot of builders. They're having what's called take advantage of the special financing, but they didn't tell me what it was, and up to $51,000 in flex funds on quick move-in homes.
Wow.
Or opt for just the flex funds and get up to $100,000 towards homes that can close in a timely manner. So basically, you can use those flex funds to reduce closing costs or buy down your interest rate or use up to 2% to reduce the price of the house.
Wow. Okay, so it sounds like what Richmond has to do is they have to do it that way because they didn't go out and buy a package of loans like the other builders have.
Well, you still have to use their in-house lender,
Mm-hmm.
but they have, I think they're just switching it up because they're letting the consumer choose how they want to use the funds.
Maybe those big numbers are appealing.
Yeah, because I was trying to sell a house down in the Southwest. It's one of their bigger floor plans, Aspire collection at, I forget what it was. And they were like 1.5 million. And they had that 100,000 flex cash, and that's what the sales rep said. And that's what they're offering now to give the consumer an opportunity to choose how they want to spend the money.
Yeah, it makes sense. So it also depending on the financing. I mean, somebody putting a lot of cash in the deal might not want and have as much need for the rate buy downs or whatnot. So,
true, yeah, especially if they're paying cash.
Yeah, if you're paying all cash,
Yep.
for sure you don't have a need for it.
So Taylor Morrison is also offering 3 different programs. Currently, when you use their affiliated lender home funding, they also have the 7-6 adjustable rate mortgage. Enjoy 3.75% for the first 7 years, and then 8th year it'll change. Plus, save up to $12,000 in closing costs. Must be under contract by August 31st and close by September 26th. Then they have a fixed FHA interest rate at 4.75%. Under contract by August 31st and close by, this one's short, September 5th.
Wow,
And then they
how
have
do you do that?
I'm sure they'll always change things.
That's
Then they also have a fixed 4.99% conventional 30-year fix on select communities that go under contract by August 31st and close by September 19th.
all right. That's a slightly more reasonable, but
Yeah.
closing an FHA in 5 days, geez, no.
Well, it's the 12th now. But yeah, if they go under contract.
I'm saying you got up to, anyway, yeah.
So Pulte's having their summer sales event, and they're also doing up to $50,000 in flex cash on select homes. Some communities, like the higher end communities, have $100,000, and available on new purchase agreements on select quick move-in homes when you use the home, Pulte lender on either Pulte Homes, Del Webb Homes, or American West Homes, from now until August 17th and close by, I think that's wrong. I don't think it's by December 31st. Probably like September 31st.
September,
yeah. Sorry.
But if they do give you that long, that's great.
Yeah. And you can apply it again towards your closing costs, prepaids, standard costs of selected options, or rate buy down. Toll Brothers is still having their incentive for a limited time on quick move-in homes. When you use Toll Brothers mortgage, they have the 2-to-1 buy down on a 30-year fixed mortgage when you go under contract and close by October 17th. So for the first year for Toll Brothers, 3.49%. Second year, 4.49%, and 3 through 30 is 5.49% interest rate. So those are great interest rates.
Yeah, good. Toll Brothers, they don't.
But now, granted, you got to know what a conventional loan is, because you got to make sure it's not one of those $1 million homes, because then that would be a jumbo loan and that wouldn't qualify unless you put a good chunk down to make it a standing conforming conventional loan.
Yeah.
Right. I don't know what the max is. At one point in time, it was in the 700s, but I'm sure it's gone up now for conventional loans before it becomes a jumbo loan.
I want to say it's in the 8s.
Yeah. I think it's in the 8s now.
I will last thing I'm going to say, sellers, look at what the builders are doing. Bottom line.
They are offering incentives like no tomorrow.
Are they crying about the market and saying, you can't get it? No, they're trying to make it happen.
Yes.
They want to make deals. So buyers hear that part and let's get it going. Let's get out there and make a deal. But sellers, follow suit. You will be happy you did. There's a reason why the builders are doing it.
Exactly. That's a good point. Let's see if there's any questions before we get into bets. Research, we talk next spring. Yes, Mr. Snoopy Doo. you needed to list with me and not with the person you listed with. No, I'm just kidding.
Yeah. Interview us. Come on, let's go.
All righty. So now we're going to go over bets. Where's Robin Ange? There it is.
Although I won't completely blame somebody as somebody's agent right now. We have to take a look every now and then. It is the agent's fault, but the agents, it's a little tough. Bets.
Yep.
Let's get into
so
bets.
Rob went first, and we were under the assumption, because we saw this before,
It was obvious.
that we would see decreases. Right?
Obviously.
How can we just keep on staying at 485?
It's impossible.
So Rob said that we were going to see a 2,500 decrease, and I said a 5,000 decrease, because again, we saw this before when it went back up and then it went back down, right? So I thought it was just as it went up.
Easy call.
I thought it was going to go back down.
Easy call, Ange.
And it stayed the same. So no one really won, but Rob was the closest to it, I guess.
I just honestly thought maybe, did I go first?
Yes.
That meant I went first. I was just trying to drop a number in there. It was hard for you to get around.
Right.
Just trying to put it right in the middle. It's just luck.
Yeah.
Yeah.
And, Damien wanted to take part. So
Oh, cool.
he said flat. So he would have actually won.
Damien nailed it.
He nailed it. All right. So without offers, Rob said 7,150. I said 7,100, and it was 7,147. So
Bing,
you're
ding,
only
ding.
3 off from that. Damien said 7,000, so he was off.
That was a little more of an educated guess there, but still, you had picked a number that I had to work around. I had to go either under or over that.
Right. And then months of supply, Rob said 3.5. I said 3.6.
I said 3.7.
3.7, sorry.
I said 3.6, yeah.
Oh, yeah. Rob said 3.7. I said 3.6. Damien said 3.5, and we got it at 3.5.
So Damien won this one.
He won 2 times.
Yeah. Or did we tie? Him and I tie?
No, technically he won that one, and this one you won.
Well, okay. So he won okay. So against him, I lost.
Yes.
Okay.
Against me, you won.
So I don't know who the actual winner is. I guess it's
You're the winner because, no offense, babe, you don't count.
I'll take it. Where's my crown?
All right. So now I get to go first. Let
Yeah.
me change this.
We should get a crown. After 5 years, we're gonna get a crown.
Oh, yeah, we should.
And then that way, when we do the numbers, one of us wears it
Yeah.
as the winner from the last.
Sounds good.
And
All right.
if it keeps being won over and over and over again, it'll be awful.
I used to
You
one
were
year,
crushing
remember
me.
I was crushing
Yeah.
like 6 months in a row.
This has been a little better year.
All right. So I can't see, because now we're going to be doing August numbers. We can't stay at 485
It's easy.
3
It's
months
an
in
easy
a
call.
row.
Easy call.
I think I'm going to predict again. I'm going to go with my prediction from the prior month and say we had a $5,000 decrease and stayed what I said.
Yeah, it's another time that a very difficult number to get. I'm like tempted just to go to like 5,100, just because I think it will be a little larger decrease, and that's what I'm going to do.
Okay, 5,100.
Yeah, I'm going to go with my gut there and just say 5,100, which is just Pricer's writing you. I know.
All right, so without offers.
Without offers, let's say we were actually at 70. Computing. I'm going to go with 7,300. 7,300, 150 increase.
Okay, I am going to be less aggressive.
Okay.
Just because I'm going to say, I don't think it's going up much. I'm going to say 7,250.
Okay. I think we're gonna be. It's like we're hitting the battleship here.
Yeah.
It's just about who hit it the best.
All right. So let me just get rid of that so we know we're not. Months of supply, I'll go first. Since we're going to drop in price slightly by 100 increase, I'm just going to stick to what I said last month at 3.6.
Mm-hmm. I guess I'll go 3.7 again.
Okay.
Yeah, it's a tough call.
Yeah. Not seeing much movement.
That's going to be actually, damn. You've got the number. I think you're going to hit that one.
Maybe.
Yeah, it's hard. It's. I don't think it stays the same.
It has to
without
drop.
offers. Yeah, no, I don't.
I mean, if we're going against the same trends that we saw in 2022, where we had a $15,000 median price increase, we had high numbers then too.
Mhm.
I just don't know why it's not dropping. It has to drop.
So, yeah, it's we'll take and review. Let's review this tape next month when we're like astonished that it doesn't again.
Yeah. Because
but it has to.
So for 3 months it stayed at 485. 2 months 480. Now we're 2 months at 485.
I wouldn't be surprised if it did a pretty big drop, like the condo carrier, like like 8,000, 10,000. I wouldn't be shocked, you know.
Right.
But same time, I can't say that's going to happen. I just wouldn't be shocked. That's all.
All right, folks. If you have no more questions, we are going to end it so I can take my nap.
So there's an easy payment calculator that we can do on that, by the way. She's got to get going. But Matt Smith said, what do the payments look like on a new build, say 450 price range? Your trouble there is going to be finding a new build at 450 price.
That's more like a townhome new build.
Yeah. I mean, there are some, and it's going to be area specific. And sometimes it's not the area that everybody wants to be.
Not the best area. Yeah.
So, but yeah, we can easily do some numbers for you if you want to hit one of us up.
Yeah, definitely.
So that's about that.
Yeah, because like I said, folks, if you were thinking about buying new construction in Las Vegas, you need an expert real estate agent, one of us, with you on the very first visit when you tour the model homes. If it's Lennar, then you scan that QR code, say you have an agent, so we can put you down as us representing you. Otherwise, we will not be able to help you, and we will not be able to get you those great deals.
Yes, and many of you are going to be selling a property and buying one of those Lennar properties like Ange might do. And so you do need an agent that is going to be strong for you to both sell your property and if you're going and thinking about buying.
And usually what I do is if I do both ends like that, I give the listing a very good deal.
Exactly. Talk to us, folks.
Yep. All right, folks. Thank you guys so much for watching.
Rock on.
And do it peacefully.
And we'll see you on the next one. The 61st
Yep.
episode.
Peace out.